Hi, everybody, and welcome to today's webinar, 5 Key Steps to Applying for and Maximizing PPP Loan Forgiveness. I'm Andrea Frost, and I'll be your moderator for this event. I'm part of the communications team here at the Capital Masters, and I'm really excited to be hosting this session. We have 2 brilliant panelists coming up today for you. Bob Hernandez is the Treasury, Credit, and Finance Wizard here at the Capital Masters. Over the course of his career, Bob's analyzed and contributed to the closing of approximately $400 million in small business loans. And Rich Rusikoff is the acclaimed author of Make Banks Compete to Lend You Money, the definitive guide to creating a dynamic narrative and top-notch business plan that gives banks what they need to say yes. Together, this experienced team is going to discuss what you need to know about how to apply for and maximize that PPP loan forgiveness. Before I hand the mic over to our 2 experts, I do have a couple of housekeeping items to cover. First, today's webinar is being recorded and it will be available on demand after the live session. Once the webinar is concluded, we'll actually email you a link so that you can access the recording directly. Also, we'd love to hear from you during today's presentation. If you have a question from our speakers, please feel free to send it through the Q&A tab at the bottom of your viewing window. We'll save the questions for the end of the session, and if we don't get to yours during today's webinar, we'll be sure to follow up afterwards. So without any further ado, I'd like to kick things off. Rich and Bob, over to you.
Thank you, Andrea. And let's bring up the first slide. And what we're going to do, our goal here is to give you the 5 key things you need to know that need to happen for you to maximize your forgiveness. And it's important to keep in mind that anything that is not forgiven because you've not properly documented it or you haven't used the money for that purpose is the equivalent of a loan. And that loan has to be paid back within 2 years. So the better your documentation, the more you understand what you can be forgiven for, the better this program will be for you. Let's go to the next slide. So Bob, I want to ask you this, as we go through these 5 steps and we look at the paths to forgiveness, what's the most important thing I need to know as an entrepreneur right now? So because I've got to submit this to banks, it's going to be SBA, and somebody ultimately is going to make the decision as to whether I am forgiven for this.
Yeah, I think the most important thing is really making a determination of your covered period. And the covered period is going to be based upon when you actually got the money. And for example, if you got your loan and the proceeds before June 5th, you're on an 8-week covered period, meaning you had 8 weeks to spend that money. If you got it after June 5th, then your covered period is 24 weeks. And you could also use the 8 weeks within that, but it's generally 24 weeks to spend that money. So once you've been able to determine what that covered period actually is, and when you actually receive your PPP funds, you have no later than December 31st to expend those. So
let's go to the next slide, because that's where we're talking about the time frame. So one is, what happened, Bob, that if you got the loan early, you only had 8 weeks to spend it. If you got it later, you had 24 weeks. I want to make sure people are clear on when they received the loan, not when they applied. Am I correct on that?
Yes, it's when you actually received the proceeds for that loan.
So what happened that you have 8 weeks and then you have 24?
Statutory differences.
So there were 2 stages in this, but it's important for you to know that and to act accordingly, because that date triggers a lot of things.
Yeah, so but basically your covered period is going to determine what period of documentation you're going to need to provide the SBA to document your forgiveness, and we'll go into what those actually those forms of documentation are later.
Yeah, because it's not just payroll. There are a number of categories that you're good for, but it's important to know what they are and document.
Right,
So,
and it's payroll, it's non-payroll. I mean, it's everything that was included within the PPP that everybody should be aware of. And I don't see how somebody would not be aware of what those things are if they actually applied for it. And that's anything to do with payroll, business mortgage interest, lease payments, utility payments, things like that.
so the more you know, the better the opportunity for you to get total forgiveness. And before we go on, I just want to say one thing. When this program was created, it was created for you to spend the money and get the forgiveness. And you are being incentivized to spend it where the provisions are. And if you don't, that's when it becomes a loan.
Correct.
Okay.
But depending on how you spend it and what you spent it for, it's not just going to become a loan. I mean, you can recognize it as a loan, but that's where we get into the different models.
So let's take a look at the next slide, because I think we go into that there. So for the average person looking at this, the average business person, this is spaghetti. What do these different models mean, Bob? And why is it important for us to know what line we want to be in the queue for?
Well, it's more than what line you want to be in the queue for. This is, you know, at some level, there's actually an acronym called CPEA, and it stands for the Center for Plain English Accounting, that kind of interprets a lot of these acts, models, things within the Federal Accounting Standards Board, within GAAP, Generally Accepted Accounting Principles. What we're talking about today is really the accounting treatment of your PPP proceeds. It can be easy, it can be extremely difficult. And I cannot stress that this isn't, let me just pick a box and let me, go file it that way.
Okay.
It has nothing to do with that. This is an actual determination that needs to be made in conjunction with your CPA or your controller, your CFO, or whoever is handling your books, and look at the actual items that were expensed from the proceeds of the PPP loan and determine what the actual accounting treatment is of those, predicated on the model that you pick. And there are 4 models that are accepted as of, I guess one of the last publications I saw was October 28th. But being that there is no clear statutory guidance from the federal government on what model to use, the AICPA and other Centers for Public Accountancy and CPAs around the US have determined that these 4 models most represent how you should account for your funds. And I can simplify it with 1 or 2 sentences for each, but they can be complex. For example, the government grant model, and I'm going to kind of go out of order here because I'm going to speak in terms of the most common items or models that are used. The government grant model, which is based on FASB ASC 958-605, is founded on the premise that the substance of the PPP funds is a government grant delivered in the form of a forgivable loan. The next most probable,
Before you go on,
yeah,
okay, so that's what I think we all think this is in the first place. How does that have to do with an accounting practice or a road I go down to submit?
well, Rich, obviously you're not an accountant.
I sure am not, but I had one for a month.
Yeah, and this is pure accounting. You have to determine how to classify an asset, and the loan initially is an asset coming into your books. So you have to determine, how am I going to book that? And the way that I book it is going to determine in part how we're going to be applying for forgiveness. It's all accounting, 100%. So as an accountant, which I'm not, however, I do have, I think, 24 hours of accounting, and I'll defer to the CPAs of the world out there and my accountant buddies who may be on the call. It's extremely important to properly classify on your general journals and general ledgers the accounting treatment of these items, how they're expensed and how they're used. So that's where these models come into play to determine how you're actually going to book the PPP loan. The second most used model is the debt model, which you're just assuming you're not going to get forgiven for whatever reason, and you're just going to book it as a loan. You're going to do it as if you got a loan from a bank, and you're going to record the interest and treat it as such. The next model is from the accounting International Accounting Standards Board, IAS 20. You're using that when there's reasonable assurance that you're going to meet the terms for forgiveness of the loan. So that's more of getting towards the grant aspect, like number one. Number one, you are assuming that it is a grant. You're going to meet all the requirements. There's no question. And that's how you're going to book it. Number two, it's probable there might be some questions in there. Maybe some things don't meet it or not. Then you go that route. The final route is the gain model, which you're really not making a decision until you actually receive forgiveness. Then you do the booking. So those are the four models.
Okay, so I'm a little schizophrenic here. Some of it's going to be debt, some of it's going to be forgiven. How do I figure out a model, or what would my accountant do to figure out a model?
That's up to your situation and your accountant and how you're using the proceeds. There is no one size fits all for this. There are no boxes to check off. It is not generic. It's like you and me. We all have our individual DNA. I just happen to look prettier than you do. But what you're going to do here is get with your CPA, get with your accountant, get with your controller, whoever your trusted source is. It could be your third-party payroll provider as well, and determine, okay, guys, ladies, gentlemen, whoever's there, let's get some consensus on how we're going to book.
I would assume third-party payroll services realize they have to play a role here for companies, and that, and again, I said I assume that they're not going to pass the buck. They're going to be able to give you some guidelines.
Correct, because you're going to be relying in part on that payroll provider, because a lot of the money, I mean, the PPP determination originally was what? It was 2.5 times payroll for that period prior to February 20th, 2020. So they're going to be the ones who provide the tax forms if you're using a payroll service for the IRS 941s, the quarterly business filings, any contributions to employee health, retirement plans, things like that. So yeah, there'll be a major portion of this. But for utilities, rents, mortgage interest, things like that, that'll be more, I would think internal accounting and bookkeeping.
So basically, I could use the payroll service for payroll, but I still need to document the other things, and I need somebody to document that for me, or for me to be able to prove I spent the money within the time frame.
Correct. I think that might roll to actually to the next slide on some of that documentation.
Okay, but before we leave this slide, basically, most entrepreneurs who want to make sure that they get this done and get the forgiveness as quickly as possible really need to work with somebody who can say, this is the right model for you. And then the assumption is that we're going to fill it out accordingly and we'll be in good shape.
Yes, and there's actually three levels of, or should I say, forms used for forgiveness. And like if you got 50,000 or less, there's an easy form similar to, on your tax returns, you have that 1040 easy. Well, there's a forgiveness form that's an easy form where basically you're making some attestations and going ahead and checking off on those and submitting it to the bank or the entity, uploading it to the entity that's going to process the forgiveness. And there's an intermediate form with a few more questions to attest to. And then there's the full-blown kahuna that is the one where all of the documentation needs to be provided. Spreadsheets need to be calculated to determine numbers of FTEs and substantiate that, contributions to retirement plans and benefits, copies of notes, leases for mortgage interest, amortization schedules, all that. So that's the full blown. And that's generally, going to be on the higher dollar loans.
So if we look back, if it's under 50,000, you can 50,000 or less, you can probably just take the short form, and if you've used the money, you're in pretty good shape, and it's a grant. The average loan was about 100,000.
Correct.
And loans in that category, we go to the next level of information you have to provide. But if you're looking at getting $500,000 or you've received $1 million or more, then you've got a lot of proving to do.
Right. And being that initially, I think everybody was aware of some of the companies that were getting exorbitant amounts of PPP money in the beginning. Some of them were in the news where they had to give the money back, and those lists were published. The SBA has come back and stated that it will be reviewing any loans received over $2 million and the forgiveness application specifically for that. So that is going to be kind of a break point where you are going to be fully audited.
And you have to make sure there that your I's are dotted and your T's are crossed, because just the auditing process will be time consuming and frustrating.
Yeah, and the SBA is going to come back and they're going to audit borrower eligibility. They're going to go through all of the rules and guidance available to determine, are you applying within the right timeframes, the loan amounts, the use of proceeds. They're going to go into everything. And I believe you need to also keep your documentation on hand for 6 years for this, because they could come back at any time.
Wow. So the three things we've talked about here is, first of all, when did you apply? And when did you get the money? And are you on an 8-week or a 24-week cycle? Then we're looking at what model you should go with. And third, how much did you borrow? And all of those things right now are key factors. And as you pointed out already, Bob, there is no one right way. It really depends on every business's or nonprofit's individual situation.
Correct.
Okay, let's go to the next. I got that one right, Bob. Let's go to the next
You were
slide.
perfect.
Now, this is really one of the hardest things. The goalposts keep moving. And Bob, you've spent a good part of the last week or so just getting current on what the rules and regulations are. What's been changing? Why can't I just assume I got it now, nothing else is going to change? All I have to do is what the AICPA says, my accountant says, we're good.
Well, I think, this is twofold. One, nothing really has changed since, let's say in September or October. What has changed is that the Journal of Accountancy, the AICPA, the people who really rule in the accounting world have all come to consensus on these four models that we've been talking about. That being that the implementation of this was extremely shoddy. It was implemented without a lot of operational forethought, and the bill was done in good intent, the 12 CFR 120, but the overall operationalization of it was a bust in my mind. And I'm talking to bankers in the North, in Chicago, here in Texas, talking to bankers in Delaware, California. Everybody's frustrated with this. So the bright star at the end of the day is that I think the accountants and those individuals who are with this on a daily basis have all come to consensus on these models. And luckily PPP follows into the nonprofit grant world the way that they normally handle this. But what I've been doing is I've been going to different sources. I've been going to major CPA firms online, been going to AICPA, been getting any updates on GAAP, and just perusing it almost on a daily basis to compile all this information to see if anything has changed. And as far as remaining current, what I'm really seeing here, and this is, let me throw out a stat real quick. Only 10% of the recipients have actually applied for forgiveness. I know a lot of the people that we sent out requests to join this webinar said, we already got it. We've already been granted forgiveness. But if you did, that's great, but you're only 10%. That means 90% have not. So I think as this starts to build and the forgiveness starts to come out, there may be more changes, I think, on possibly the audit side of things. So one commonality I'm seeing between, or should I say across the board, is the idea of maintaining your documentation, making sure you have your accounts separated properly, and just do not take this lightly as far as, it's going to be a gimme and we're going to get forgiveness. It's the government. They don't care. That could be farther from the truth.
So I want to look at this from the standpoint of the banks and the other resources who have handled PPP loans beside the bank. This has been an enormous drain on bank resources. And that's just phase one. It's almost like the virus. There's phase one, there's phase two, there's phase three. And now 90% of these still have to go back to the financial institution for them to check it off before they pass it over to the SBA. I think one of the things we're seeing is this is impacting the limited resources banks have to focus on lending.
That's correct. In one instance, we've had a couple of loans that have literally been in underwriting for several months because the banks don't have the infrastructure to decision the loan and handle PPP and related items at the same time. So something has to give. I was talking to a gentleman yesterday that I've known for quite a while in a bank in Chicago, and he was actually taken out of doing SBA loans and was assigned to a team that, that handled nothing but PPP loans for the bank. So it is a definite drain on resources. One of my buddies that I served at another bank a couple of years ago said they received 8,000 requests for loans with PPP. So, invert that to now you're on the forgiveness stage. Automation's great, but somebody still has to touch the paper.
And there's a time frame a bank has and then SBA has in order to actually move it along or forgive or tell you still owe, you now have some debt. You're familiar with the time frames, aren't you, Bob?
Yeah, I mean, the banks basically have about 60 days to make a decision. And then once they make their decision, there's a statutory 90-day period for the SBA to review those documents and then process whether they agree with it or not.
So one of the things that's going to happen is, I think when we were discussing this, we figured most of the PPP loan, PPP information is going to come to the banks around February. And if that's right, that's when the tsunami hits. If they get 60, 70% of these in February, and then that means that if you want your banker to do this for you, not your banker, your accountant, you want to make sure you get to them before tax season.
Yeah, it's going to get nasty out there just with the volume of applications for forgiveness coming through. Initially, and I think that's where the first 10% came from for who have already received forgiveness. Everybody thought, including us, that the deadline was October 31st of 2020, and some banks did as well. And that just wasn't correct. So I think that prompted a lot of the early requests for forgiveness. And luckily, some of our clients that we consult actually did that. And that's to their benefit because now they don't have to worry about that going forward. And it's going to put them in a better position to do other things.
So basically, one of the things we're recommending is sooner is better than later. Get it out of the way. Knock it out.
Correct.
Okay, let's go on to the next slide. Okay, this is really what it's all about. It's all about the documentation. And the documentation, working with the right financial advisor or in-house advisor, determines which path you go down, and then it's time to submit. What would you like to add to this, Bob, in terms of what you recommend that a company do? And if they're looking to put together their plan in place right now, what are the key things they need to do in terms of people, time, and money? And also, when we get to money, the people that do this for you, that's not money you can consider as applying towards the loan. That's an expense you have.
Yeah, correct. Yeah, and any money you spend towards this is not tax deductible either. But basically, you're going to have to. My accountant's barking at me back there. Excuse that. you're going to need to assemble all your payroll documentation, which is bank account statements, any third-party payroll service provider reports, IRS 941s, quarterly business and employee wage reporting, unemployment insurance filings, any payment receipts, canceled checks or account statements, and documentation on employees. That's just on the payroll side.
So let's go to the next slide, because we want to share with you what we have available for you that you can find on our sites, and then lead you to places where you can find what you need. So Bob, do you want to share what these documents that we have and these resources we have, why this is valuable to you and why this would be a good place to start?
Yeah, I mean, the Paycheck Protection Program report is more informational, but it's really telling, because it's going to show you by NAISC code and by bank and by dollar amounts, everybody who got loans through the PPP program. So it's just really a good report to have and to look at, and just kind of, pique your interest and update yourself on everybody who received the PPP loans. The FAQ on loan forgiveness, I think, is really good. It's about an 11, 12-page document with frequently asked questions on the SBA website, but we have it on our site that answers a lot of the basic loan forgiveness PPP questions that people have been asking over the past several months. The list of supporting documentation to be submitted, that's just a general guideline of what you'll need to provide. That's going to be, of course, unique to your business and your situation, but it's generic enough that it gives you a broad feel for really what you're going to need. That includes not just the payroll stuff, but any mortgage interest, leases, lender amortization schedules, rent documents, things like that. And then remaining current on all PPP loan forgiveness updates. I believe we put some websites out there where you can go and just go to some of these larger CPA firms and entities like the Journal of Accountancy, and just get some updated information. A lot of it's really dry. It's like eating sawdust, but that's how accounting is. And if you're a technical person, then on the accounting side, then it'll be a nice, tasty fodder for you.
Well, the good news is, we all know there's no free lunch. The grant, you got the money, you needed it, you used it, and now you just have to document what you did so that you get the forgiveness. Bob, I wanted to ask you, did you take a look through the frequently asked questions?
Yeah, I mean, I've gone through those. I haven't memorized them, Rich.
No, I wasn't going to ask you that, Bob. I was going to ask you if anything jumped out at you from those questions or from the way they're answered, that it gives you the clarity you need.
Yeah, actually, there's some neat ones in here. If this kind of information is considered neat, let me. Here's one here. Question number 3 on the general loan forgiveness frequently asked questions. If a borrower submits a timely loan forgiveness application, does the borrower have to make any payments on its loan prior to the SBA remitting the forgiveness amount, if any? And the answer is, sounds like Jeopardy. As long as a borrower submits its loan forgiveness application within 10 months of the completion of the covered period, and that was that 8-week, 24-week I was talking about earlier, the borrower is not required to make any payments. So that's an example of one of the questions. Another good one was, what expenses for group health care benefits will be considered payroll costs that are eligible for forgiveness? The answer is employer expenses for employee group healthcare benefits that are paid or incurred by the borrower during the covered period or the alternative payroll covered period are eligible for loan forgiveness. However, payroll costs do not include expenses for group healthcare benefits paid directly by an employee. So there's quite a few questions like that within the document. Here was one too. How is the amount of owner compensation that is eligible for loan forgiveness determined? This thing just gets nuts, and I think it might be something you just want to read rather than me going through the whole thing. But it depends on the business type and whether the borrower is using an 8 or 24-week covered period. And I think too that some compensation of owners over 100,000 is not eligible. So there's a lot of detailed stuff in here, and there's a lot of basic questions that are being answered. It's a good document.
And that's why one size doesn't fit all. And that's what makes this so complicated, because you really have to make sure that you're aligned with how you qualify for this and how that determines the accounting method that you use, and that you get things done on a timely basis.
Yeah, and this is really, really dry stuff, and I debated about putting it out there, and I'm going, well, did we bite off more than we can chew? But the more I think about it, not really, because I don't think I think anything that you can give a client or somebody through a website, give information out there. I think they call it thought leadership or something that that benefits them and gives them a leg up, is important. And I don't have every answer here, nor do I want to provide every answer. That would just be, it'd be nuts. This is more of, know that it's out there, know that the information's there, know that you need to take it seriously. You could get audited. Probability you won't, unless you're 2 million or up on your proceeds. But know that there are sources of information out there. The accounting community has come to consensus on how to book it, and there are plenty of resources.
Bob, I wanted to ask you one other question from earlier. So the period ends, my period, let's say ends February 15th, I'm making up a number, or let's go back to October 15th, but I don't pay rent till October 20th for the previous month. That's a gray area, right?
Yeah, there's some FAQ in there regarding the way that rent falls, or how payroll falls. For example, I believe I'm not going to use the rent, but I'm going to use payroll. If payroll costs are paid on or before the next regular payroll date after the covered period, how is that handled? And they actually give an example in the FAQ on how to treat something like that. It's a little long, but it's understandable. So there are, I guess, safe harbors is what the term is used. There are safe harbors within the discussion on how to handle those that are during off periods, whether rent, you're in your covered period, but you're not making your first rent payment, or you made your first rent payment a month before or a week before. There are treatments for that.
Okay, so it's just important that you know that there may be some gray areas that you can use in your favor.
Yes, and a lot of those are covered in the FAQ.
Okay, so the FAQ might be the most important document here to take from our website.
Correct.
let's see if we have any questions on this lively, exciting subject.
As a matter of fact, gentlemen, we do have a couple of questions. The first one is, I didn't get a PPP loan. I got a different kind called EIDL. Are there any forgiveness programs for that?
No,
Nope.
that's just a regular bouncing baby loan. I mean, there's been talk, that, Congress might get together and look at some forgiveness for those, but, they can't chew gum and walk backwards at the same time right now. So I don't see how that, would happen. But as of today, no, the EIDL loan does not have a forgiveness provision.
The good news about EIDL is it's a 30-year loan. You have a year before you have to make your first payment. You probably got a grant of some size with it, depending when you received it. And it's a lovely interest rate. So
Now, let me add something there. If you got the $10,000 EIDL grant, the free money on the front end, that will be deducted from your PPP forgiveness.
So what does that mean, Bob?
Means your PPP loan will be reduced by $10,000 if that's what you received.
So that means I'm going to owe. What does that mean I'm going to owe, Bob?
Well, it depends on how much you got.
Okay. So I got 10,000.
You need to get with your accountant on that.
Okay. But it's just one more of the things that are out there that you need to pull together.
Right. That's why it's so important to get, start working on this now, get with your accountant and, your advisors and start figuring this thing out.
Okay.
All right. I actually have another question, gentlemen, and that is that I spent the PPP money and it helped keep us in business. In addition to getting forgiveness for PPP, I'm looking for a way to grow in 2021. There obviously aren't going to be any more PPPs. What are my other options for some capital in 2021?
Bob, you want to jump into that, or would you like me to?
I was going to say call the Capital Masters, but you can pick up from there.
All right. Well, what we've been doing is working with entrepreneurial companies to determine the best path for them to get capital. Many companies did not do well in 2020 as a result of the virus, but they're coming out of it at the end of the fourth quarter, and they're looking good going into next year. And they had profitable years in 2019 and 2018, and they have the right factors to be eligible to go to the bank for an SBA loan or for commercial loan. And if you think you're in that situation and you want to contact us, we can take you through the preliminary steps to tell you whether or not you'll be eligible for a loan right now, what you might be eligible for, and how much rolling up your sleeves you're going to have to do to get there. We find from what the banks they're talking to, they love a great narrative and they want to see the numbers. So Bob, I would just like you to talk for a minute about we did a program on the 5 C's, and I think it would be important for anybody looking to get a loan in 2021 to know what are the key areas they're going to have covered to qualify for a loan. And I'm talking, and I know you don't speak generically, but I'm talking from 40,000 feet up.
One thing that I'm hearing is it seems that a lot of the banks are looking at the period from June through October as a benchmark for if a company was able to come out of the crisis. And that's kind of arbitrary to me, but that's kind of the guideline that a lot of them are operating under. And now that assumes you had a profitable 2019 and you were okay up until the virus hit and everything shut down. So if you had a bad 2019, you're having a bad 2020, and you haven't shown any profitability, then it's probably not going to work for you. And we would need to look for some sort of alternate finance, leveraging of assets, hard assets, real estate, land, things like that, in order to assist. But that is one thing that keeps popping up more and more. And loans are being done, expansions are being done, business acquisitions are being done. There's certain sectors like pizza that came out ahead and are doing well, but everybody else is getting scrutinized really, really hard. And it's every bank is doing it different. For example, there's a restaurant deal that we're working on right now with some experienced restaurateurs, and one bank was purely looking at cash flow and performance on a projection basis, which is standard SBA protocol. Another bank is going, nah, we don't care about the projections. We're going to make sure that all the existing operations and restaurants that they own will cash flow the new one, so we don't have to worry about that risk. So there's hybrids of every sort. And one thing I've learned being 40 years in this business is, yes, there's one standard operating procedure with the SBA, and for the most part, everybody follows it. But a lot of banks will make a hybrid of that between what's on their balance sheet and with the SBA.
Ironically, banks have money, but it's a period of uncertainty. And banks are not risk takers. Entrepreneurs are risk takers. Venture capital is risk takers. So you have to make the case on a historical basis, which could be pre-COVID, and that you are a profitable company. But I was also talking about things, Bob, like liquidity and collateral and things like that will be factors that will determine whether or not a bank is even going to talk to you.
Well, you're getting into behind the curtain aspects, Rich, and I would, ask that anybody who's interested in learning more about that. I believe, Andrea, we have a webinar out there that goes into depth on some of these titles. Am I correct?
You are correct. We do have a webinar that covers the 5 C's of credit, and it's available on our website for replay. And we actually have another question as well. Someone asked, with new administration coming into play in January, is there a possibility that there will be another round of PPP available?
So
yeah, there's always a possibility, but I don't think it's predicated as much on the new administration as it is on the right hand getting with the left hand and trying to come up with a number that works. We can all be hopeful, but there's let's just say there's a lot of chaos out there that's going to need to be unwound before we start really seeing and hearing about something like that.
My gut tells me, and Bob will tell you what he thinks my gut's worth, but my gut tells me that we're much more likely to see another round of PPP than we are to see an extension of EIDL past 150,000. And the reason I feel that way is the economy, the stock market's doing great. Small to mid-sized businesses are hurting significantly, and they're the ones that employ people. So I can't imagine that there won't be a program, and maybe PPP 2 or 3 will be modified so it won't be as complicated.
Yeah, I partially agree with Rich on that. But one thing to note, no matter what you hear out there, the stock market is not an indication
Yep.
of how the U.S. economy is doing. It really isn't. So, you know, look at your other indicators out there, gross domestic product and things like that. That's really where you're going to look. But right now, the economy and small businesses account for about 11% of GDP. It's not in good shape.
And that's
So-
why I think there's going to have to be another round.
A follow-up to that question is, where should I pay attention to be kind of first to know if there's another round of PPP, so I can get in on it at the very beginning, you know, instead of being caught up. I know with the last round of PPP, there was a big rush and many things got delayed. So how can a savvy person who's keeping an eye out, you know, where should they monitor to find out so they can be the first in if there is a new round?
Well, one of the things is it's almost like it's a hurricane. You see it coming 1,000 miles away before it's going to hit shore. Publications like The Economist, Axios, the financial sections of newspapers, Wall Street, financial cable station, they're all over this. And senators and congressmen want this to leak if it looks like there's good news coming. Bob, you get your information from probably about 10 to 20 sources that you look at on a daily basis on what's happening in the financial world. Anything you would add to my list of what everybody can find?
Yeah, I have some obscure places like Lexology, breaks down into capital markets, into loans, into real estate, and it sends out a daily news blast for whatever sector you want to look at. It has something about PPP almost on a daily basis. Bank Dive is another one. SBA.gov, just the standard SBA website, you know, puts press releases out there daily. So those are some places you can go. Then the federal government, Federal Reserve website, things like that are also good sources. There's actually a lot of places to go to stay on top.
And the thing I would say in answer to the question that was asked, there's going to be no surprises. You're going to see it coming. It's not just one day going to happen. The real question is, once it happens, to digest the information and figure out what you need to do to get in the queue early.
Is there anything that people can do ahead of time to maybe prep it? What kind of ducks do they need to have in a row so that if, as they're watching, they see it coming, that they not only, you know, are aware that it's coming, but they actually are prepared ahead of time to jump in and be first in line?
So I would quote Stephen Covey here, begin with the end in mind. If you're about to go to get forgiveness, what are the things you're doing now? Those are the things you're going to want to do day one when this is available.
And for, generically for the PPP, make sure you have all your financial statements up to date. You know, that's probably the most important thing, because the PPP originally was based on your 2019 tax return. And a lot of people didn't have those filed because they either extend through October on a normal course of business, or they just, you know, didn't do it. So make sure your financial information is up to date.
So basically, the sooner I get my tax return done, the better.
Right.
Okay.
Bob, any thoughts on whether, given that stumbling block, if there is another round of PPP, would they base it again on your 2019, or would they look to based on 2020, which could be questionable? given how difficult 2020 has been financially for so many business owners.
There's been no discussion whatsoever about that and how they would come about with doing it. So I don't have anything in that arena, because there's nothing out there. They're just talking dollar amounts of possible disbursements at the end of the day, in budgets. They're not talking about where it's gonna, how you're gonna be able to analyze it. I assume that based on the way they've handled everything else, and they, meaning the people out of DC and the people who are trying to operationalize this, they would have to give some sort of guidance on how to access that money.
So I just wanted to point out, if you go to our website, we have a lot of free downloads. We have a financial glossary, questions you can ask and expect from the bank, lists of items that you can negotiate, how do you assess your current financial department, and also the 5 C's. And we also have some programs you can purchase from us that can really be of value to you as you prepare for the next loan or two. So we really encourage you to go to our website, see what we have to offer, and don't hesitate to get in touch with us if you have any other questions after this, or you'd like to schedule an appointment. This is what this business is all about. We're here for you on the Capital Masters.
So both of you gentlemen, your one word summary, not your one word, but your one sentence summary of PPP forgiveness. What's your one takeaway? Just quick and easy.
Do your homework.
And Mr. Hernandez?
Document.
All right. I think we have wrapped up questions and we're closing in on being out of time. So I want to thank everybody again for joining us today. Watch your email for the link to today's session, because we have been recording it. And as Rich mentioned, we've got a lot of helpful resources on the website. In fact, the slide that showed the SBA FAQ and some of those other PPP specific resources are on the Capital Masters website. It's thecapitalmasters.com. And to find those resources mentioned in today's webinar, you'll need to scroll down to the bottom and then click on resources. In addition, we will include a direct link to those resources in the post-webinar email that you receive. And also stay tuned either on Capital Masters social channels, check your email, or look on our website, because we do webinars every month and we are always promoting them. And we also are always looking for topics that interest you. So if there's a topic you'd like to see us do a webinar on, please feel free to use the contact on our website and let us know.
Or we can do a workshop if you're part of a forum or a group and you'd like us to do a deep dive with the other entrepreneurs that are part of your group. I want to thank Lucy Martinez who put this together. I want to thank Siobhan Casey, who's done an enormous job on this, and Claire and Maureen. Everybody on our team is involved in giving Bob and I a chance to talk and share information with you all for an hour. Thank you, the Capital Master team, and thank you all for participating.
Yes, there'll be a, oh, and you just cut me off.
Mm-hmm.
You're in, Bob. Go ahead.
Go ahead, Bob. Yes, go ahead.
It's too late, guys. The boy cut me off as usual.
Oh, all right. Well, everyone, we hope you have a fantastic day. And don't forget, we are always here for you to reach out for help